Limitations of the ATR can be seen with discrepancies like this, where price is falling and ATR is rising, or a case like this where an upswing flattens. During the same time, ATR goes on a steady decline. But then it's also common to see cases like this, where similarly price begins to flatten after a small to moderate upswing, while ATR could also be declining, such as at the beginning of this period, but then it sharply increases before flattening again. The point is, ATR does not and is not meant to provide an indication of the direction of price movement on the chart. For instance, here ATR is in the 260s. That's just a rough indication of the range price can fluctuate from day to day, from candle to candle. It has nothing to do with the direction of price movement, but rather the potential magnitude of movement. Again, here are some more examples of discrepancies that can naturally take place between the direction of price movement on the chart and changes in ATR. For example, before the highlighted range, ATR is increasing while price falls. Then during the time span of the highlighted areas, ATR peaks and flattens for some time, prior to falling, while at the same time price begins to increase. Overall, the uptrend is quite gradual. Normally, price takes a small step up each day to close a bit higher. Then here, with a proportionally large spike upwards, there's a noticeable increase of ATR in the short term during its steady decline. After that, ATR naturally begins to continue the decline as stable movement quickly returns back to relatively small fluctuations in price. Later, the uptrend continues slow and steady as ATR continues to fall and flatten naturally with such small fluctuations in price for an extended period of time. But notice again here, there's a small jump in ATR for a short time due to a relatively large movement within the context of this uptrend, except in this case, the larger movement is a drop. To reinforce the scope of ATR use and its limitation, you should remember ATR is only an indication of volatility to provide an estimation of how much price could fluctuate. The direction of price movement is not directly tied to the changes in ATR. Although it is possible for ATR to increase at the same time price is increasing, and it is also possible for price to decrease while ATR is decreasing, the changes in ATR are only due to volatility and not the particular direction price is trading towards. Divergence between ATR movement and price movement is also equally as common. Right here is an excellent case. It doesn't matter whether price is increasing, remaining relatively flat, or decreasing. ATR is affected by the changes in the fluctuation of price. ATR can drop and be relatively low when fluctuations in price are relatively small. Small fluctuations in price, as we've seen, can take place in uptrends or downtrends, or such as in this case, when the uptrend begins to flatten, small fluctuations in price can take place during times of relatively horizontal movement when price remains largely unchanged. Then, such as during uncertain times or indecisive times in the market, price can go up and down drastically in the short term, but remain flat overall when looked at from a longer time period, while ATR can increase significantly due to increasing volatility, even as price remains relatively flat or even begins to fall drastically. See here in the short term, these two candles here are relatively similar in size to the previous ones over the last month. But as the average true range increases a lot due to the formation of these proportionally larger candles that make up a sharp short-term drop and rebound, ATR increases sharply at this time regardless of the direction price is moving in, since it's the fluctuation in price, also called volatility, that is increasing, which in turn pushes ATR higher.